Hi, this is Daniel and you're watching Unrivaled Investing. This is a no-hype, mission-focused channel to try to find you exceptional companies and unrivaled investments. Today I'm taking a step back to ask you, what is your investment strategy for 2021? What are you going to do? Because a lot of people are looking back at 2020 and they're saying, you know what, this was a really tough year. You know, COVID impacted a lot of people in a lot of unfair ways. It was a really hard year. Thank God it's over. But the bright side, 2020 could have been a prosperous year if you knew what you were doing. And for a lot of people, it was a prosperous year even though they didn't know what they were doing. And so then the question becomes, is what am I going to do in 2021? You know, you see stock markets, particularly US stocks, making all-time highs. You see some stocks that are just going parabolic. Seems like they just can't go down. The question is, what should you do as an investor? And so this video is to sort of break down my thought process and how do I tackle the year ahead, what is my strategy, what is my approach to doing well, having a satisfactory financial journey in the year ahead. If you are interested in learning about potential multi-baggers, that's what I usually talk about on this channel. Make sure you subscribe. If you're already a subscriber, I appreciate that thumbs up. And if you want to follow my personal journey to try to find multi-baggers, go to unrivaledinvesting.com. Click on Journey. So this video, as I mentioned already, is about thinking in strategy for 2021. You know, a lot of people are sort of taking this, hey, it worked, why won't it work again? And, you know, like, hey, this stock just keeps going up. That's great. Just keep buying it. It works. Will Rogers, you know, he had a quote, you know, where someone said, how do you find out which stocks you want to buy? He goes, I like to buy the ones that go up. And you know, that's the way a lot of people are investing these days. And a lot of people, you know, people are mistaking valuation expansion in a bull market for genius. And that's sort of a common phrase you hear, where the reality is this is an unusual time, or at least 2020 was an unusual time, where you effectively faced a Great Depression in terms of financials met with incredible intervention by central banks. And a lot of people aren't sure how it plays out. You know, you see the Federal Reserve literally creating trillions of dollars of value. You see the Congress trying to create new stimulus, trying to figure out who's getting how much, which is also going to create trillions of dollars of deficits. People aren't sure how does this play out over time? What does this mean for me as a potential investor? What am I supposed to do? So you're asking all these questions. What am I supposed to do in 2021 when, you know, this is, for some people, 2020, it was a very prosperous year. They could have had great returns, you know, 20, 30, 40, 100% returns I've even seen. So that's sort of the question that a lot of people are asking. And in this case, I think it's sort of worthwhile to sort of give some context on what is my strategy for 2021. And first, you know, I want to give a little context. You know, before there was Jim Cramer, the bobblehead doll, the bobblehead, there was Jim Cramer, the hedge fund manager. And this is a very different guy than the talking head guy, where it's about, hey, what is the cutthroat strategy that I'm going to use to win year after year? How am I going to invest? And it was really interesting, the approach. I don't necessarily agree with all of it. There's a reason why he got out of the game. But before him, before there was the Jim Cramer bobblehead, Jim Cramer hedge fund manager, there was this guy. And this is the guy that actually taught Jim Cramer. A lot of people don't know that. This is Michael Steinhardt. Jim Cramer worked for him for some time. And he wrote a book called No Bull, which I highly recommend for those that are interested in learning about different investors' histories. He's one of the first hedge fund managers. He compounded at 20% for several decades. One of the best. One of the best. And the reason why I bring it up is because it's very relevant to today. It's very relevant to how should you think about your strategy for 2021. And what did Michael Steinhardt do? What did Michael Steinhardt do, you know, with his investment approach? Is he took this thing called a 0-day or first day approach, where he's saying, hey, if this is day 0 of the investment portfolio, what do I want to own today? Imagine that I don't own anything. And he effectively would be willing, he'd be comfortable blowing out of all of his positions. I want it cleaned out. Now, sometimes he would do that and be tax inefficient. You don't have to do that. You can psychologically think, all right, I want a clean slate. I want to review this. 0-day, let's review everything. Let's go through each position. Why do I own it? What's the risk reward? So that's what Michael Steinhardt did for his strategy. And that wasn't just a new year thing. That was a daily thing, particularly when his returns weren't adequate, where he started losing money. He was like, all right, 0-day. let's blow out everything. I'm going to rebuild this position by position. Let's go name by name. I have no biases attached to it. I don't care if it's gone up, it's gone down. Let's figure this out. What's the risk reward? Why do I own it? What's the thesis? You go through each of these things. Then before Michael Steinhardt, and his approach, and he did very well, and that's just one of the tips and strategies he used for investing. There was a name that a lot of people recognize, which is Warren Buffett. And who taught Warren Buffett? But Ben Graham. And this is one of the tomes he wrote, which is called The Intelligent Investor. And the definitive book on value investing, Warren Buffett. This is the book Buffett recommends. You can see it's my dog-eared copy. Look, each person has to figure out their own journey. Their own financial journey on how are they going to do their investing in the future. What's going to work for them in the years ahead. And the reason why I'm calling out these two different sources is because they're very relevant models for you to incorporate in terms of how do you think. And what are the models that I got from The Intelligent Investor? There's a few, and Warren Buffett calls them out. I think it's chapter 8 and maybe chapter 11. Two particular models. One is Mr. Market, where Ben Graham was saying, look, you should not take Mr. Market, you should not treat the market as a guide. You should not say, oh, this stock went up, therefore I should buy it. That is a mistake. You don't want Mr. Market to guide you to what you think you should be doing. You want Mr. Market to serve you. Mr. Market is here to offer you opportunities. And if one day he says this, here's the price, and you don't like it, I'm not interested. The next day he offers you something, the same thing, and it's half the price, maybe you are interested. And the words that he uses is that it's like a manic depressive, Mr. Market. And that's a great way to think about it. One day it's exuberant, the next day it's fearful. And right now we're in a period of exuberance. A lot of people, a lot of speculators think this is just easy ways to make money. And it's backed by the Federal Reserve printing trillions of dollars. Someday this game will change. Someday people will say, you know what, valuations matter. Until then, it's worthwhile for you to recognize that this framework long-term of thinking about valuation is important. And that's actually the second point that he also brought up. So Mr. Market is not only there, he's not there to guide you, or you could say it's a she if you want to. He or she's not there to guide you. Mr. Market is what they use in the book. It's not there to guide you. It's there to offer opportunity for you. You have to pick out which of the opportunities that are right for you. But don't bias yourself based on what someone else is doing or how someone else has performed or what they own. What's right for their journey may not be right for you. You need to size it up yourself. You need to think about it. You need to hear about what you think the risk rewards are. So then the other aspect, the second core lesson from Ben Graham's Intelligent Investor, the guy who taught Warren Buffett, one of his other key lessons was this concept of margin of safety. You want to buy at a price where even if it doesn't work out, you don't lose that much money. That's the whole concept of margin of safety. Even if things go sideways, you don't lose a lot. Another way to think about that core concept is that it's sort of like a coin tossing. Monish Pabrai talks about this. I should have pulled out that book as well. Where, heads, I don't lose that much. Tails, I potentially have a great return. So these are all really important concepts for you to think about. And the reason why I'm bringing that up is I think these are critical for how you think about your strategy for 2021. Your strategy for 2021, if it's just a hope and pray method, God bless, and I hope it works out for you. But the reality is, if you're just banking on the fact that 2020 saw a couple of your holdings or a couple of stocks go up a lot, you shouldn't bank on that just happening again. Because in a lot of cases, there's a favorite, and I'm sure some people can guess it. There's a favorite EV automaker, that catapulted up where the valuation expanded by 500% in 2020. Well, long term, if you look at what actually drives investor returns over time, and I did a video on this on YouTube. It was one of my first videos, nicely edited. It was called like the $1 trillion secret behind the stock market. The $1 trillion secret to build wealth in the stock market. And the answer is that there's three things that drive stocks over time. There's fundamentals, valuation, and distributions or dividends. Distributions can also include things like spin-offs. But that's it. And over a multi-decade perspective, fundamentals is the greatest driver by far. Whereas valuation, meaning how much someone's willing to pay on a per share basis of value. So if this company has $1 of sales and one day they're paying $1 for it, the next day they're paying $5, that's a 5x expansion in valuation. That is not sustainable. Over a multi-year perspective, valuation gains tend to get wiped out. And so for a lot of investors that saw a dramatic valuation expansion in 2020, I say beware. It won't always be this easy. You need a strategy where you're looking name by name, doing a day zero approach, name by name. What do I think of the current valuation? What do I think the valuation could be 5 years from now? Am I getting a good margin of safety? Am I happy with these things? Because you know what? Some people on these videos, they go, you know what, Daniel? Logic doesn't matter how you think about valuation. You know what? It's just buy because ARK's buying it, or buy because the Federal Reserve is printing. And you know what? That might work for some time, but it won't always work. And when it stops working, you want this in your head. You want fundamentals. You want logic to back it up. You want a margin of safety. And the reality is, most people, if you're trying to play this game of like, oh, you know what, I'm going to get out before the music stops, good luck to you. But if you look at like the top 1,000, wealthiest people, they're people that have made long-term bets on things and have generally ridden with that over time. It's not making I'm going to day trade, or I'm going to trade this and get out before the music stops, before everyone else realizes that this is way overvalued. That is a mistake. So what's my personal strategy? I'm going name by name, going through each of my holdings, particularly my top holdings that have the disproportionate share of my portfolio, and thinking, what's the risk reward? What's the valuation? Do I need to rebalance these things? And for Journey subscribers, they do know I'm going to post a video shortly of here's each of my top holdings. What do I think are the risk rewards? Like, for example, one of my top holdings, it's up 500% since I bought it. And I actually, a lot of people are like, well, do you buy more? How can you possibly buy it after it's up 500%? That's where you need to have a basis in fundamentals. What's the logic behind it? What's the risk reward? You need to do a 0 day approach. Would I still buy it at this price? That's the whole point of a day zero approach. It's 8% of my portfolio. It's up 5x. Would I still buy it at this price? Yes, I would. And as Journey subscribers know, here's the risk reward that I see. So I think for your strategy for 2021, I would say, hey, what worked in 2020 may not work in 2021. Go through each of your holdings, a day zero approach, a clean slate, figure out what's the risk reward, what do I think is the downside, what do I think is the upside over a time frame, because you want to have that logical framework should someday you need to have logic when investing. When speculative mania disappears and you're like, oh man, I need to be able to fall back on logic. You want to have it. You want to be able to know, oh, this is the reason why I own this, and this is a reason why I feel comfortable owning it, even if it goes against me. So that's my strategy for 2021, going name by name, trying to find companies that I'm confident I would buy in a day zero approach, and I have a margin of safety where I feel it's an opportunity, where Mr. Market is serving me to own it. There's a last component, and that's the name of this channel, which is Unrivaled Investing. The whole point of this is I'm looking for companies that are unrivaled, and that is the secret to building wealth, the $1 trillion secret to building wealth in the market, is that if growth long term if fundamental growth is the core driver of your returns, you need to ask yourself, well, wait a second, what drives that growth? And there's two things. One is you're tapping into a market, a big market, hopefully. Two is hopefully you have a value proposition that's unrivaled, and that's where the name comes from. So not only am I looking at the risk reward for my top holdings, I'm also going name by name, trying to figure out, has your value proposition increased, decreased, stayed the same, or about the same, for each of these holdings? Because if it's strong or unrivaled, I'm happy to own it, because that means you're probably going to keep growing at an adequate rate in the years ahead, assuming management knows what they're doing. So that I think is the real strategy. Try to find these exceptional companies. Try to find unrivaled companies. And honestly, that's part of my value proposition to you, YouTube subscribers, is each week I'm calling out multiple companies. I'm going to tell you whether or not I think this company is unrivaled, not unrivaled, what do I think the risk reward is, and that's why you subscribe to this channel. I hope this video thinking about the strategy for 2021 is helpful for you. Thank you so much for watching.